the warm welcome to Money to Grow channel. I'm excited to help you with insights, strategies, and tools to grow your wealth. Today's video is going to be very exciting because in this video I will be told how use triple RSI with EMA 50 indicator buying entry strategy. So guys, you need to listen to this video very carefully and watch it till the end. Understanding the RSI indicator. The Relative Strength Index, or RSI, is a key tool in index, stock, and crypto trading, functioning as an oscillator that swings between the extremes of 0 to 100. This indicator is highly valued because it helps traders identify overbought and oversold market conditions. When the RSI reading climbs above 70, it signals an overbought market. Traders and trading robots typically avoid opening long positions during this time because it often precedes a potential price reversal. Conversely, when the RSI drops below 30, it indicates an oversold market. This suggests that the asset's price may soon rebound and start climbing, making it a potentially opportune moment to consider buying. The RSI's clear signals and straightforward interpretation make it a favored tool among traders for assessing market conditions and making informed trading decisions. RSI at level 50. RSI level 50 is a point on the Relative Strength Index that is seen as neutral. Traders often watch this level closely because it can give clues about market momentum. When the RSI goes above 50, it usually means that bullish momentum is strengthening, indicating potential upward movement in prices. On the other hand, if the RSI drops below 50, it suggests that bearish momentum might be building, hinting at possible downward movement in prices. This makes RSI 50 a significant marker for traders looking to understand shifts in market sentiment and potential trading opportunities. Bars on the price chart using a shorter time frame. For example, 5 periods will cause the RSI reach extreme values or above 70 and below 30. More often. By the same token, longer time frame settings will see the RSI indicator reach above 70 or below 30 less frequently. This chart shows how to change the various settings. What is the best RSI setting for day trading? The developer of the RSI, J. Wells Wilder Jr., recommends using the 14-period RSI. But other RSI settings can also be good to trade depending on whether you are trading stocks, index, or other financial markets and the time frame you are trading off. Looking at this chart, you can compare a 14-day RSI versus 5-day RSI and versus 50-day RSI setting. It can be observed that the 14-period RSI gives several signals. The 5-period RSI is very frequently giving trading signals and the 50-period RSI gives just one very good trading signal throughout the time period. Selected in his book New Concepts in Technical Trading Systems, Wells Wilder only uses trading strategy examples with the 14-period RSI, although other RSI settings are certainly possible and potentially profitable. Since Wilder created the indicator, we should take time to note why he thinks his indicator is best set up with 14 periods. How to use the triples RSI in trading strategy. You already know that the triple RSI involves calculating the market data using the same concept as the traditional RSI and conducting additional calculations. When the dynamic red line reaches above the other two dynamic lines, and all the lines are above 50 level, it declares a positive force on the asset price and vice versa. For the opposite crossover, When the dynamic red line reaches below the other two dynamic lines and all the lines are below 50 level, it declares a negative force on the asset price. The triple RSI trading strategy. In this trading method, we combine the triple RSI indicator reading with the ADX and 50-period EMA indicators to determine the future movement of any particular trading instrument. We confirm the price direction using the triple RSI and 50-period EMA indicators. And then we confirm the current trend strength by observing the ADX indicator reading. Then seek to open trading positions by combining both indicator readings. This strategy suits many time frame charts. We suggest using a 15-minute or higher time frame chart to get the best results. 50 EMA after having spent some time away from it. If you followed moving averages closely in the past, you would likely understand that I am basically hinting at trending price action. When price runs sideways, moving averages tend to close him and will get entangled with the ongoing live action. Also getting hit quite frequently by price for moving average-based systems. That can be account killing as a simple filter to this problem. You should only be interested when price touches the 50 EMA after relatively spending some time away from it, as when it shoots off into a decent trend. Let's look at some of the points on the same chart that we might be interested in. Notice how each of the two touches of the 50 EMA result in a bounce and that they occur as a follow-up to a strong move prior. It is not uncommon for price to bounce harder from the 50 EMA. The more time that it spends away from it. Trading only in a trending market where price does not hit the 50 EMA in quick succession. Let's also talk about another extremely crucial filter. Horizontal support and resistance levels. I am excited every time I see price pulling back to the 50 EMA following a strong move. But my fingers will not roll over the order button until I find the point where price touches the 50 EMA is lying in confluence with a horizontal former support and resistance level. I have found this to be an amazing filter. Sure, I miss a few trains, but the ones I take, I sure as hell enjoy the rides, mostly the entry trigger. Now that we know the dynamics of the system itself, let's look at the two ways that I believe you can trade this method, ranging from a conservative approach to an aggressive one. The aggressive approach. This approach allows you to execute an order upon the touch of the 50 EMA. The stop loss will need to be placed arbitrarily a few points above or below your entry, as the case may be. Notice that such a trigger would have worked phenomenally. Price hits the 50 EMA and bounces hard. The conservative approach. For those who like their peace and relaxed lives. There is the alternate approach where you can wait for a definite price action signal at the bounce of the 50 EMA in the form of a candlestick pattern like a pin bar or an engulfing bar pattern. In this example, the chart shows a nice pin bar of the 50 EMA and a horizontal support and resistance level. You can now take your trade as you conventionally would if you were trading the pin bar. That is, taking an entry at the break of the pin bar with the stop loss subjectively placed at the break of the other end of the bar. Personally, I prefer to wait for a price action confirmation. Because I have been an avid fan of candlestick patterns my entire trading career. Although very occasionally I will also take touch trades when I see a mountain load of dead obvious confluence of support and resistance areas lining up at the touch point. So if you can learn to combine with 50 EMA and supporter resistance area, you have a mighty effective trading system. What is ADX indicator? Filtering out bad trades. It's a guarantee that we will run into bad trades and occasionally lose. We can't completely eliminate that. However, we can add some rules and filters to try to reduce the number of false signals we get and limit the number of bad trades we run into. And that's what the triple RSI ADX system does. Very well. And now I want to show you the important part, how we use the 14-period ADX to help filter good trades from bad trades. First, when the ADX line is below the 20, it means there is no trend. Second, when the ADX line is above the 20, it means there is an extreme trend. Third, when the ADX line is moving upwards, the trend is gaining strength. Fourth, when the ADX line is moving downwards, the trend is losing strength. Whenever we see the signal candle, we immediately look down at the ADX to see where the 14-period ADX line is. If the ADX line is below the 20, we do not trade regardless of anything else. We only consider entering a trade if the ADX line is above the 20. The 20 line is our marker. Anything below the 20 line is a no-trade zone. Anything above the 20 line is a possible trade. We also need to look at which direction the ADX line is heading. If it is moving down, we do not trade, because the current trend is losing strength. If the ADX line is above the 20 and is moving in an upwards direction, to signal a valid entry to the market. And now how to trade with the triple RSI strategy. Bullish trade scenario when seeking to open buy positions. Observe indicator readings as follows. First, the dynamic red line of the triple RSI window reaches above the other two dynamic lines. Second, the dynamic blue line crosses above the dynamic green line. Third, all three dynamic lines reach above the central or 50 level and head on the upside. Fourth, the price increase and above the 50-period EMA line. Fifth, the ADX reading reaches above 20 entry. When these conditions match in your chart, it positively influences, so we ready for buy. Buy position trade. Set an initial stop loss below the current swing low with a buffer of 50 or 100 points. Trade scenario when seeking to open sell positions or finding bearish trends. Observe the indicator readings as follows. First, the dynamic red line of the triple RSI window reaches below the other two dynamic lines. Second, the dynamic blue line crosses below the dynamic green line. Third, all three dynamic lines reach below the central or 50 level and head on the downside. Fourth, the price decreases and below the 50-period EMA line. Fifth, the ADX reading reaches above 20 entry. When these conditions match your chart, it negatively influences in this stocks. So open a sell position. Set an initial stop loss above the current swing high with a buffer of 50 to 75 points. This should be simple enough. This a strategy how to trade the market using the combination of triple RSI, 50-period EMA and ADX indicator to fully understand this wonderful strategy and to make the most out of profit. Conclusion. Buy setup, long position. First RSI conditions, all three RSIs, short, medium and long, are above 50, suggesting a potential buying opportunity. Second EMA condition, the price is above the 50-period EMA, indicating a bullish trend. Third ADX condition, ADX is above 25, confirming that the market is trending strongly. Entry signal, enter a long position when all the above conditions are met. Exit signal, exit the position when Times any of the RSI's red line crosses above 80, indicating an overbought condition. Times the price drops below the 50 EMA, suggesting a trend reversal. Times ADX falling, indicating a weakening trend. Sell setup, short position. First RSI conditions, all three RSIs, short, medium and long, are below 50, indicating and suggesting a potential selling opportunity. Second EMA condition, the price is below the 50-period EMA, indicating a bearish trend. Third ADX condition, ADX is above 25, confirming that the market is trending strongly. Entry signal, enter a short position when all the above conditions are met. Exit signal, exit the position when times any of the RSI's crosses above 50, indicating an trend reversal. Times the price rises above the 50 EMA, suggesting a trend reversal. Times ADX falling, indicating a weakening trend. If you found this video helpful, please give it a thumbs up and share it with friends. Press the like button and subscribe to Money to Grow channel so that you never miss any of our new videos. See you soon. Thank you for watching the useful videos. If you liked the video, please like and subscribe.